What's up everyone, it's Caddy with MoneyVest. So this is going to be a public Patreon video. It's going to be available to all our free and our paying members, and wanted to go over the entire MoneyVest platform as it is right now. I've been spending a lot of time testing the platform right now myself, going over individual stocks, charting, visualizing the fundamental analysis, the MoneyVest metrics, the analyzer tools, and everything, and kind of debugging it as much as I can before it becomes ready for all of you. So in this video, my goal is to go over every single detail, give you a bit of a tutorial on what the platform is looking like right now, and give you a bit of a sense of the plan for the next 6 to 12 to 18 months. Because as I mentioned in the live stream, we've got very big plans for the platform over the long term, because this is only a beta launch, and I want to set expectations straight that eventually you will find a lot of functionality related to our biggest USP, which will be the macro dashboard and the portfolio integration. So those are things that will happen over the next 6 to 12 months with the MoneyVest index, with the S&P 500's fundamental and technical positioning. You can get a bird's eye view of the entire market and how overvalued, undervalued the markets are, and a lot of other macro indicators. We're working with a couple data providers that are going to give us all that data, and we're going to take it and use our creative analysis and again, the knowledge base that we have as a community to build other tools and other research analysis and features on the platform. So bear with me. I really do appreciate your patience, but the cool thing is that you're going to be locked at this price for the lifetime of your subscription. So unless you cancel, and again, we're going to take your feedback very, very seriously. I've put my heart and soul into this project. In the last 6 to as much as 9 months, we've been building it, and it's going to continue. It's going to be a work in progress forever, because we're going to be making additions and tweaks and whatnot based on your recommendations. So thank you so much for joining, and if you are a free member watching this video, if you want to access the beta launch, again, all you have to do is kind of upgrade to a paying subscription. And then you'll have access to this entire platform where you can quickly analyze individual stocks. Whatever stock it is that you want to analyze, doesn't matter. There's over 17,500 companies that are now listed on this MoneyVest platform that you can analyze. And I'm going to walk you through exactly how that process is going to work out for you. Because I know that, spreadsheets are great, but when there's a lot of spreadsheets coming from a guy who's been investing and analyzing stocks for over 10 years, I've got over 50 different spreadsheets for different models and different financial models, as well as bond markets, as well as interest rates and discounted cash flows and discounted sales and net liquidation value, looking at balance sheets. I mean, it can be a lot. And that's the whole idea, is putting everything on the web, which you can access. It's functional. It's useful for you. So let's pick a stock. Let's just analyze any of the bigger companies. Let's just go over to Microsoft. I don't think I've analyzed Microsoft on the platform before. But what you have here is the homepage for any company, right? So you've got the stock price, of course, the stock chart broken down by 1 week, 1 day, 1 month, year to date, all that stuff, and some key stats for that company, right? For that stock. And eventually we're going to introduce our candlestick patterns and candlestick charts in the future. So there's going to be a separate charting section where you can look at the actual chart, and in candlestick patterns, and our technical analysis is also going to be incorporated in some way in the future. But for now, if you scroll down, you're going to take a look at the key statistics. So it's a little bit of an expansion of the key stats over here. It gives you a bigger and much better idea of how that company is doing in terms of its growth rates, valuations on a trailing 12 months basis, financial health based on the most recent quarter, efficiency on a trailing 12-month, margins, and some basic stats once again. So you can get a good snapshot of the entire company over here. So very, very cool, way to quickly analyze whatever it is, whatever company you're looking to analyze. If you come down, it gives you a bit more about the company itself. So show more, this is all about Microsoft, industry that it belongs to, the CEO, IPO date, the website, number of employees, headquartered where, so things like that. And then if you come down, this is where the MoneyVest metrics are. These are our own metrics that we have programmed. We've given numerical value to all of these, and you can sort of see more. Click on this here, or you can also come up and go to MoneyVest Metrics. That's the next tab. And the moment you do that, this opens up this table, and you can drop this table down between 3 year, 5 year, 7 and 10 years worth of analysis. So let's say that you want to look at the last 7 years worth of data, and now you select that, and it quickly populates 7 years worth of data. So for growth, we've broken it down into 5 categories. We've got growth, we've got profitability, we've got efficiency, we've got financials, and then we've got valuation. So those are the 5 most important things for us that we look at when we're objectively analyzing any company or any stock. And then again, of course, it's further broken down into multiple metrics, right? So growth is further broken down into like 10, 12 metrics. Profitability's got 6. Efficiency's got about 9, I think. Financial tables got about 15. And valuation's got closer to 18 or 20, I think, is what we have here in terms of those metrics. So I think all in all, there are close to 100 metrics that you can analyze for any company based on MoneyVest Metrics or quick stats and key statistics table as well. So let's say that 7 years, you want to look at the company. And the other cool thing is that you can also start visualizing this. You can plot the revenues here. You can plot gross profit, operating income, net income, free cash flow, whatever it is that you want to plot, you can start plotting in and you can start visualizing, okay, how well the revenue and the profits and free cash flows have grown for the company. And also on top of that, you'll get a check mark, right? You'll get a check from us. I've programmed this myself, given a criteria and a logic behind this. And for example, revenue has been 12.8%, so that's growth, right? 14% gross profit, that's also growth. High growth is earnings per share, so 21%, almost a CAGR of 21%, that's high growth. So what does that tell us? That tells us that, okay, is revenue growing at 12.5%? Net income is growing at almost 20%. So that's growth, but earnings per share is almost at 21%. That's high growth. That means shares buyback, right? The company's buying back shares. And that's exactly right. If you take a look at shares outstanding, it's going down by almost 1%. So that's good. That's exactly what we want to see. We want companies to buy back shares. So you can see that over here. So if I remove revenue, gross profit, operating income, net income, and free cash flow, you'll notice that shares outstanding have gone down from 7.8 billion down to 7.4. If you come over to the 10-year analysis, you'll notice that, again, it's a more aggressive buyback of 8.4 billion down to 7.4 billion. So that's a share buyback of over 1.25% in CAGR. That's, again, good. Free cash flow on a 10-year basis is slow growth because it's 9.24%. Gross profit is also slow growth. So it gives you a bit of a check mark of how well the company is growing versus not growing. For NVIDIA, it's high growth across the board. For Tesla, I believe it's going to be a little bit slower, especially if you consider the last, let's say, 3 years. So if you come over to Tesla here, come over to MoneyVest Metrics, you'll notice high growth in 3 years. 5 year, it's been a little bit more stable for operating income and net income because prior to 2019, the company was not profitable. Prior to 2020, I should say, it was not profitable. So we don't have a starting value to calculate it off of. But the last 3 years, of course, it's very, very high growth across the board. So just to give you an idea, it kind of gives you a bit of a sense of how the company is growing its numbers. Then if you come down, let's just go back to Microsoft and we'll do 7 years. And if you come down, this is profitability. And again, you'll have a check mark. So you can see the gross margins average is 67% 2023. So last year they did just under 69%. Operating margins also, we're seeing expansion, 42.3% versus the average of 7 years of 37%. Also expanding, that's very good. Net margins 34% compared to the average of 30%. EBITDA margins of 48% compared to the average of 45%. Operating cash flow margin was 41% last year versus an average of 42%. So some years has actually done well. In 2021, we saw 45.6%. 2022, we saw just under 45%. And 2023, a little bit over 41%. So that's why it says compressing, right? Margins are somewhat compressing compared to the average here. And free cash flow margins are also worsening as of last year. So 2023 was 28%. And most years, the company's done more than 20%. The average is, that's why 31%. That's why it says worsening margins here. Something to keep in mind. And you can, again, plot the margins here and see for yourself, visualize, okay, how is the company doing. And if I only show you the operating cash flow margins and free cash flow margins, you'll notice that both of them are coming down, and that's exactly why it says worsening or compressing, because of the fact that they are coming down. You can start to visualize and see that for yourself as well. And if I simply show you the gross margin, or something that's expanding here, for example, net margins, you can see that they have slightly gone up from 64% to now 69%, and net margins have also gone up from 26% to now sitting well over 34%. So they've gone up. That's why it says expansion for those two margins. If you scroll down now to efficiency, again, you can do the same thing here. We've got a lot of metrics to choose from. Some of the more important ones are, again, stock-based compensation as a percentage of revenue, operating cash flow, and free cash flow. It's more or less, sub 10, sub 5%. That's very good. That's highly efficient. And for other metrics, also return on equity, very strong. Return on assets, very strong. Return on capital employed, and return on invested capital. So all of these numbers, very, very efficient. Again, you can plot this on the chart as well. And then we come over to the financial table. And what we have here is, again, the cash, the debt, the net debt. So you can plot the net debt here and take a look that, okay, net debt's always been negative for the company. So that's very, very good. And again, you can also plot and see how the cash and debt stacks up against each other. So now you've got the cash and the debt and the net debt in the bottom. So that just goes to show that, okay, the company's got more cash than debt on the balance sheet. That's why they have a negative net debt. That's exactly what we want to see. You can also look at over the 10-year period and how cash has, of course, come down a little bit, more or less stable, but debt has come down significantly from 88 billion down to 64 billion. That's why the net debt has grown from 2017, 50 billion to now sitting at well over $56 billion in negative net debt here for the company. And again, you can plot for a lot of different things. Like, for example, debt to free cash flow. You can plot for current ratio, quick ratio. Once you do that, then you can, again, see how well the company is doing for those ratios as well. So anything that you really want to plot, you can do that. You can actually go crazy with a lot of metrics. I wouldn't recommend it. The chart may break down, but you can plot about 10 to 12 metrics at a time over a 10-year period, so that you're going to have a lot of data points on the visuals. But just, again, of course, be mindful of how much you're plotting and how many metrics you can really analyze in one go. Then again, you come down, solvency ratio, you can also take a look at. Right now, it's excellent. Across the board, it seems to be very, very good. However, debt is increasing at a much faster rate. In the last, I would say, 10 years, it's increased at 15%. Cash is improving, but it's improving at 3.29, so a little bit lower compared to the debt increase. And right now it scores a 4.19 out of 5 for financials. And this right here is the solvency ratio, which has gone from 15% to now sitting well over 41, 42%. Eventually, we'll also have a glossary table to kind of help you better understand and explain exactly what every metric means and how it's calculated, and what we're going to be very transparent in our analysis, and how we're looking at these companies, and what's the way that we evaluate. So that's going to be available. But it's just, again, giving you a bit of a tutorial on what type of metrics and what kind of information is available on the platform. So when it comes to valuation, scores a 2.36 for the right reasons, because 2023 valuation was 38.6, whereas the average is 30.6. So it trades at a bit of a premium valuation. And we've kind of tiered this based on very cheap, reasonable, premium, expensive, very expensive. That's the tier list where you can see in terms of check marks. And for valuation for Microsoft, you'll see that across the board, it's either premium or expensive or very expensive. And this is simply based off of its average, 10-year, 7-year average. So maybe if you come over to the 7-year average, maybe these numbers will change to something else, right? Right now, it still shows premium and very expensive. Let's say if you come over to 5-year, because 5-year average for Microsoft is going to be much higher. Now we've come down to premium and mostly expensive. Something is reasonable, like price to book seems to be reasonable. 2023 was 13.5 versus the average of about 12.9. So that is somewhat reasonable. And then we've also got a net liquidation value and an NLV per share for the stock as well, which is $4.77. Eventually, we'll also have an NLV calculator where you yourself can calculate the net liquidation value for whatever company, whatever stock it is that you want to calculate for. Now, coming over to fundamental analysis, and we're going to be adding a few more tabs here over the next 3 to 6 months for insider transactions and for hedge fund trades and political transactions. A lot of stuff eventually will be added. But here you can find, of course, the income statement, the balance sheet, and the cash flow broken down by annual or quarterly. Again, you can switch between 3 to as much as 20 years worth of data. So you can also find 20 years worth of data here for the company. So in this case, for Microsoft, we're going back as far as 2004. You can start plotting this in. Again, that's 20 years worth of data. Gross profit, operating income, net income, let's say EBITDA. Again, this is 20 years. And then if you want to come over to balance sheet, or let's say cash flows, you want to plot for free cash flows as well, or operating cash flows over here, you can do that as well. This is, again, 20 years worth of data for Microsoft that you can see and visualize. And the cool thing is that if you want to switch this from annual to quarterly, you can do that as well. 8 quarters, 12 quarters, 16, or as much as 20 quarters. 20 quarters is going back as far as 5 years worth of data. So if you go to 20 years, now you can see, again, 20 quarters worth of data here for Microsoft and how it's actually done in terms of those metrics. And the cool thing is that you can switch this to a line chart as well. So if you want to do a line chart, let's just do line. Everything is going to be a line, and you can see how well the company is growing in all of those sections. And once again, you can switch between quarterly, annual, over 20 years, 7 years, whatever you want to do. You can customize this and analyze the data however you want. So that's, again, one of the biggest sort of drawbacks I had when I was looking at stocks is that, okay, I want to visualize it. I want it both on table format and on visual format. And then I want to take this data and plug in my own values, be my own analyst, make my own estimates, make my own projections, and to better see, okay, whether the stock is undervalued based on my analysis and whether it's overvalued based on my projections and what I believe. I'm not subject to an analyst on Wall Street who thinks that, okay, Microsoft is, the best company in the world and it's going to go 30% and that's the end-all be-all price target. You still have access to that data. So if you come down, you can switch to analyst estimates. So these are all Wall Street analyst estimates giving you a strong buy rating with 40 ratings total, 36 buy ratings and 4 hold. These are the price targets they've put together on their sort of analysis. We got a low price target of 440, high price target of 630, and an average of 494. And this right here is going to be the forecast from all the analysts on various different years, right? So we're going from 2023 all the way to 2031, and that's a CAGR of 14%. So that simply means that over the next 8 years, the company is expected to grow earnings from $9.68 to over $27, and that's going to be a CAGR of just over 14% for the company. And as years go by, that's going to be the different CAGRs that you can look at and, of course, calculate. This is going to be the revenue of about $212 billion, expected to go to over $500 billion. That's a 12.2% compounded annual growth rate. So when it comes to using the analyzer tool, when you're trying to, let's say, figure out your own intrinsic value for the stock, you can do that in multiple different ways. Whether it's a discounted cash flow or whether it's a discounted earnings model. And eventually there's going to be a few more models that we're going to build: discounted sales, net liquidation value, and a few other models, momentum model, and other things that I really have in store for all of you. But discounted earnings multiple is going to take into account net income. Discounted cash flow is going to take into account free cash flow. And again, you can analyze it however you want. And the beauty is that it's going to give you a bit of a sensitivity grid or a matrix to better understand if your inputs change, how will your outputs also change? So for example, $72 billion of net income last year. Let's say we analyze for 7 years, and the compounded annual growth rate for the last 7 years is 19.71. You can confirm this number if you come over to MoneyVest Metrics, and if you go over to 7 years, you can take a look that net income has grown at 19.71%, right? So that's the number, the last 7 years worth of growth for net income. You can either decide that, okay, last 7 years, 19.7% growth. Next 7 years is also going to be 19.7%. Either you can apply that sort of philosophy, and you can also come down and take a look at the price earnings multiple. Price earnings multiple on average 33.69 over the last 7 years. So you can either do that as your analysis, that okay, 36.6 and actually a 7-year analysis, so 33.6 and 19.71. That's the last 7 years of averages and CAGR. Or you can look at the analyst estimates, come down and take a look at analyst estimates here, and then think and look at, okay, next 7 years, they're only expected to grow at 14.5% based on analyst estimates. So you can either look at historical numbers, or you can look at the forward expectations and then extrapolate what makes sense for you. What, as an analyst, knowing about Microsoft, researching more about the company, looking at some of the more qualitative analysis pieces, what are they coming up with? How much of an influence artificial intelligence will have, and like I said, this is a work in progress. So eventually we'll give you a lot of that analysis pieces, a lot of that research. There's also going to be a section for qualitative analysis because it's going to show you the total addressable market for the company and where the market share is for that company. We'll give you all that analysis so you can better, even more informed decision when it comes to forecasting for the future. So if you come here and let's say that you decide the next 7 years, I feel the growth rate is going to be closer to 16%. The P multiple, 33 right now is where it trades at. Let's say that it's going to stabilize around 25, which I think is reasonable. Share buyback over the last 7 years has been 0.99%. But knowing Microsoft and knowing how much cash they have, I feel like this number is going to accelerate a little bit further. So let's say that I want to put down 2% in share buyback. Margin of safety of 10%, discount rate of 12%, same net income. If you hit calculate, we get an intrinsic value of $322. Right? That's going to be the intrinsic value or the fair value for the stock. That means it's 28% overvalued right now. If you come down, see more, gives you a whole calculation of how we came out to that number. And then this is the matrix or the sensitivity grid, which you can take a look at and be like, okay, if I change my assumptions to a 19 times P multiple and a growth rate of 14%, fair value drops down to $217. Or if I increase it to 33 times multiple and a 24% growth rate, then my fair value jumps to $679. So it gives you a bit of a matrix, a sensitivity grid on different inputs, different growth rates, and what that intrinsic value is going to look like for that company. So that's what we have for now. Eventually, like I said, we're going to be building more tools for you, more calculators, more financial models that we have already on our spreadsheets, putting them on the web so that you can use it on one single platform, do a full comprehensive analysis, fundamental analysis, and of course, macro analysis related to the markets on our platform. So, and then again, eventually integrate your portfolio, track all your holdings, track the risk of your portfolio, compare it against other benchmarks. So we got lots of really cool stuff coming out, and we'd love for you to get some hands on this tool and give us some feedback. And again, help us better understand, okay, what can be improved on, what kind of suggestions we can work on, and what kind of features and ideas that we can build moving forward. So hope you all enjoyed this video. Let me know your thoughts on the comment section below. Would love for you to join and take advantage of it. So there is currently a 51% discount for all the members that do take advantage of this. You can lock this pricing in and have early access on July 8th, because this is not the public launch. This is only the beta launch. We're only going to be improving on the platform over the next 3 to 6 months, and then most likely going to have a much bigger public launch at the end of this year, early next year for everybody, for the entire world. So hope you all enjoy this. Happy investing. I'll see you all in the next video.